Hello everybody, welcome to another episode of Market Talk. Today we're going to look at the top 5 stocks of 2022. So slightly different from the previous one, this is now not the top most traded ones, but rather top most in terms of, I would say, the returns. For these top 5 stocks, 4 out of 5 of them were related to energy stocks, right? So the energy sector actually provided pretty much great returns in 2022 due to the whole political and economic turmoil that was happening in Russia. So the S&P 500 Energy Index actually provided a 61.3% return in 2022, including dividends. So the very first top stock of 2022 is actually Occidental. Right? So Occidental is also another of Berkshire's darlings now. Well, they own approximately 21% of the company. So what do? It's oil and gas exploration and production company, and it explores for and develops and produces oil, natural gas, as well as natural gas liquids. So if we actually look a little bit into their fundamentals, well, in terms of earnings per share, upward and positive trend. In terms of debt to equity, their debt to equity ratio is actually pretty high as well at 3, but their free cash flow is positive and has been on the upward trend. So that's just one thing to take note for Occidental. However, there must be a reason why Warren Buffett is hands over heels or trying to buy whenever he can. So it's definitely worth taking a look, or rather a deeper look into this company rather than just looking at the surface level of this company. So the next one that we're going to be looking at is called Constellation Energy Corporation with the ticker symbol CEG. And so their earnings per share was actually positive for the past 4 years. However, since 2021 and 2022, it's dropped to negative. Its debt to equity ratio is under 0.5 and its free cash flow has been actually on a downward trend and it's now negative for the past 3 years as well. So what do? They are actually the US's largest producer in terms of carbon-free energy and a leading retail supplier of power and energy for homes and businesses. So what they do is that they primarily generate nuclear power. The Biden administration is aiming for net zero greenhouse gas emissions by 2035. I would see a growing importance or perhaps a growing reliance on this company for the production of energy. However, the industry itself, because nuclear energy, would face safety concerns about your spent fuel rods, radiation leaks, as well as other environmental issues. And also the cost of building these power plants are definitely way higher than the more cheap and competitive energy sources such as, we have wind, solar, and these are also gaining in popularity. So this is something that you can take into consideration when you look at this company. The next one that we're looking at is called Antero Resources Corporation, the ticker symbol AR. Well, for them, the earnings per share has actually been seesawing up and down between positive and negative over the past few years, but the most recent one was actually positive. The debt to equity ratio is more than 0.5 at about 0.6, but their free cash flow is actually on the upward and positive trend. So what do? They are an independent oil and natural gas company that is engaging in the exploration, development, as well as production of natural gas liquids, as well as oil. So one thing about this company we saw in their investor relations was that in 2022, the CFO said that it was a transformative year for Antero Resources Corporation. So they managed to reduce their debt by approximately 1 billion. In total, they managed to bring their total debt reduction since 2019 down by over 2.5 billion. At the same time, they have repurchased shares. And looking forward in 2023, they intend to continue lowering their debt and to continue these share buybacks too. In the words of their CFO, return capital to shareholders. So it looks like an attractive company in the sense where they are trying to reduce the debt that they are having, but yet at the same time you can see that they're trying to maintain the price of their shares at a certain amount by carrying out their share buybacks. It sounds interesting. I mean, just looking at the surface, it sounds interesting and maybe worth a deeper dive into this company. The fourth one is actually Texas Pacific Land Corporation, ticker symbol TPL. They are actually a real estate operating company. However, they have a segment on oil and gas royalties. So it's still somehow they have a segment that's related in energy, but they do more than just that. So in terms of earnings per share, their earnings per share has been positive and on the uptrend for the past 10 years. Their debt to equity is actually at 0, and their free cash flow has also been on upward trend and positive for the past 10 years. What they do, they are actually the largest private landowners in the whole state of Texas. They own over 880,000 acres of land in West Texas. And when we look at the metrics, the 3 metrics that I brought up, they come across as the perfect company in terms of value investing. One interesting thing to note about this company is also that it has a 10-year average return of 43%, which way surpasses the S&P 500. This really looks like a very interesting company that you might want to look into. However, I just did a check on one of their share actually costs $1,700 if I'm not wrong. So yes, if you have the money, this really might be worth looking into. It seems quite interesting looking into this company. Okay, the very last company that we'll be looking at today is called Signify Health Incorporated, ticker symbol SGFY. Okay, so let's just look at their metrics first, alright? Their earnings per share has been negative for the past 3 years. It only started to turn positive in 2021. Their debt to equity ratio, however, is low at about 0.3, and their free cash flow has been positive and is on the uptrend. However, Signify Health is a relatively new company. They were only incorporated in 2017. And what they are is that they are actually a healthcare platform that leverages on using analytics and technology, to provide a network for all these patients to be on. So these are the top 5 stocks for 2022. Will I consider any of them? Yes, I would actually consider the Texas Pacific land, but at the moment I think it's too expensive for me. But I do sell options on one of them. So if you want to learn more also on how to sell options, how to evaluate companies at a deeper level, not what I've just done, but really at a deeper level and looking at their annual reports and all, and actually figuring out whether they are considered cheap at the current price, do look out for the next VIA Masterclass. And don't be afraid to sign up and to learn more. Yeah, if not, that's it for today for the top 5 stocks of 2022. And see you.